Testing. You good?
Good.
Get a little quick sound check.
Can you hear me?
Sound check, please.
I can hear you. Whip it up.
I can hear you.
Well, what's everybody? Shane SantaCroce here, and as always, we're going to make it happen. I brought some special guests with me today, and as you guys know, it's an open format, so we're always looking for something new and interesting to talk about. I've had a lot of questions about the real estate world, what I do, how I do it. As you guys know, my real estate holdings are very different from traditional. So we're here with a real estate agent local to the area and a mortgage lender as well. And we're going to go ahead and just kind of get some advice from them and talk about some of the opportunities. We'll talk about the industry a little bit, how it's changed. We might talk about the past and what could be coming. We'll talk about some opinions, what we think is going to happen next in the industry. And go ahead and leave some comments on any questions you'd like to ask in the future. We'll start here to my left. Kyla, you want to go ahead and introduce yourself?
Yes, I'm Kyla, originally from Boston. I've been here in South Florida for about 12 years now. I've been in the mortgage industry 17 years and excited to be here.
All right. Steve?
Hey, all. Good afternoon. My name is Steve. I'm from New York. I'm a realtor here for 7 years, serving South Florida, Dade, Broward, and Palm Beach County. And
he's so happy to be on the show.
Yeah, of course. Yeah, it's great to be here.
All right. Marcio?
Thank you, Shane. My name is Marcio. I was originally born in Brazil, came to the U.S. when I was 15 years old, raised in New York. I've been in South Florida for about 12 years now, and I spent about 10 years in the mortgage industry. I left, became a realtor. Regret doing that. Back into the mortgage business where I think I provide the most value. And I'm a Kyla's business partner.
Nice. You can bring the mic a little closer to you there. Sorry.
Thank you.
All right, cool. So we got some different backgrounds. So you grew up your first 15 years in Brazil?
Correct.
What was that like compared to here?
Very different. We would just basically spend all day outside. So the things that U.S. parents complain about Brazil are about their kids now. You multiply that times 5. Like summers, we would get out of the house at like 8 o'clock in the morning and not come back until like 8 or 9 p.m. And our parents would not have any clue where we were. So.
I think this is generational. I'm not even sure if it's different from country because when I was a kid, it was the same way.
Right.
Like I could not wait to get out of that house in the morning.
That we found out where our friends were by wherever the bikes were laying in the driveway.
Yes.
Like,
And you had to walk to someone's house and knock on the door and ask for your buddy, and if it wasn't there, on to the next, right?
Right.
And my rule was you had to be in before
When
the streetlights came on.
Yeah.
So it's very, very different. I just think it's generational. Now it's like I got to fight my kids. Fortunately, my kids are active in sports, but my friends' parents always ask me, how do you get them outside all the time?
I know.
Well, you raise them in a way that says, hey, let's get outside. I give them their playtime. They get an hour a day for the video games, but ultimately, let's go outside and play and be involved. So I think it's generational these days. Kids love to be inside.
Totally.
It drives me nuts.
The iPads.
Oh, God.
Yes.
All day.
Yes.
It's interesting. Obviously, we're going to talk about real estate, but the whole thing of staying inside and the iPad, I had this debate about bullying recently. Right?
Yeah.
And people say, why is it so different now? When we were kids, it was so different. I said, well, when we were kids, if there was a bully, right, maybe you got beat up at school. Maybe you got pushed in a locker or whatever. He took your lunch money. Right? You did beating up? I'm sitting next to Kyla, the bully.
I know.
That's definitely your new nickname on my phone.
No, I wasn't the bully. I defended the kids being bullied, but I didn't get beat up.
But here's the thing, is like me either. When we went home, it was over, right? You had your friends, your neighbors, your siblings, whatever. Right. But now between all the technology, social media, it just doesn't end. And I think that's why the mental health aspect has become so drastically different between when we were kids.
Right.
We can go on this for a long time. Let's go back to real estate.
Kyla, whenever we have these conversations, I never hear a person say, I was the one that got beat up. Everybody's, I never got beat up.
No, I've heard people admit that they've taken a few beatings. Yeah. I'm grateful that I haven't, and I've retired my gloves, so I'm going to go with a perfect record.
Go to a police officer's bar and you'll hear about it. No, I'm just kidding.
I was about 50-50.
I love you guys, I'm just joking.
I was about 50-50. I gave some, I took some.
Yeah, that's normal.
And the ones that I took, then I get home with a black eye, and then my mom would drag me back to the kids' house and talk to their parents.
That's how it was.
6 months later, I would be giving that person the beating.
See, my mom was the one getting a knock at the door with the kid with the blue eye. I was a bad kid. I did get my ass beat one time, really good by my best friend.
Oh,
of all people, got me really, really good. Sucker punch me.
Did you say
Snuck me.
friends?
No. So Sean, if you're out there, I'm talking about you. Anyway, let's get back to some real estate stuff. So, look, everybody always wants to know some advice or opinions. What I want to do first is go around the room, and if you had one piece of advice for somebody looking to finance, buy, sell, refinance, whatever, what would that advice be?
So I would say the biggest thing right now that I always hear is people feeling like they need to wait out the market, because this market is so volatile and it's so different than any market that we've ever been in. So I always hear, I want to wait. I'm going to wait. I just had somebody today. I'm going to start maybe like December. So, I haven't even gotten back to him yet because I've been in meetings today. But my first question to him is going to be like, why December? So it's super important to know that the more time you wait, the more money you lose. Property values are going to appreciate. They always appreciate. It's 3 to 5% on average. Obviously, in the past couple of years, we've seen something that isn't normal, the way that properties have appreciated. But as far as declining goes, even if there is a decline, it's not going to be something that's that drastic. If anything, it's going to plateau versus increasing at the pace that it's been, or even at a normal pace. And I had this conversation a year ago, and even almost 2 years ago, and I told people these property values are not going to decline anytime soon. They're going to keep going up. Take advantage of the rates while they're low, because your affordability is going to change when rates increase.
Absolutely.
And here we are, exactly what I said. Some people listened to me. A lot of people, wanted to, place their bets, and I don't know what I'm talking about. And obviously, none of us can predict the future or the market, but being in this industry for 17 years, and I went through 2008, which is nothing like what it is now. And I can go on and on about that, of why it's different. So when I tell you that, you losing money, I mean it in the sense of you're losing equity that you could be building. I bought my house actually just over a year ago, the house that I'm in now, and I've already built about $75,000 in equity that had I waited, my property would cost a lot more than what I paid, and I would lose out on that money. Not only that, I have interest rate in the 2%. I can't get that now. Even as a lender myself, I'm not getting that rate. And so to just add to that in closing is that the rates that we were getting, last year of 3% that are now looking, in the 5%, some 6% range, those people that could once buy a house that was, say, $400,000. Now they can't afford that house. Their debt to income ratio no longer works. So you not only lost out on property that, fits your needs and your taste, but you also lost money. And so it's just never a good idea to wait. They always say, buy real estate now and wait, rather than wait and buy real estate.
What's interesting, right, is when you talk about waiting, that is such an American thing, right? Because if you gave people in other countries the opportunity to buy, which in most countries you don't have the opportunity to finance anything, period, right?
Right.
We always say, I'm going to wait. Well, what are you actually waiting for? And it applies in so many different areas of life. What are you actually waiting? I love when people say this one, right? Because I do a lot of life coaching, and they say to me, what are you waiting for to go to the gym? Well, I'm going to lose weight first and then go to the gym. What? I don't think that actually works that way, right? And so here it's the same thing. I'm waiting to do what? I'm waiting to lose equity to purchase the home. I'm waiting to lose buying power to purchase the home. How much better can a market get than it is right now, right? It is insane what's going on, and it's going to change. What change? We'll talk about that, and we're all going to have our opinions. But if you're out there listening, ask yourself, what are you waiting for? What are you waiting for to happen? If you're waiting for another natural catastrophe or epidemic to come around and drop the rates down to 2%, it's every 20 years, man. It's since the Great Depression, every 20 years, it's a cycle. You got the 20s, you got the 40s, you got the 60s, you got the 80s, you had 2000, and now you got 2020.
You can literally Google it and read about the recessions and then the effect that they had on the real estate market, if any. And I will tell you one thing about 2008 is that was a direct result of bad lending practices. The things that were allowed, the things that were allowed in 2008 are no longer allowed now. We have guidelines that could go from the floor to the ceiling in fine print of the guidelines that need to be followed and things that need to be adhered to So when we talk about 2008 and compare it to now, it's nothing like now. What happened now was a result of the pandemic, and
Absolutely.
and the government was looking to make things more affordable, and they didn't want the real estate market to crash, which is why rates, were brought down so significantly. And as you can see, people weren't out of money because everyone's
No, of course.
out
And
there
you know what?
buying.
Is not enough people took advantage of it in the right way.
Right.
Which now is leaving a market open for all these cash buyers to come in, which is making it even more difficult, right? So this market, especially in Florida, I mean, look, the industry is affected differently all over the country. We live in a very unique place, right, in Florida. So our market is very, very different. So for those of you that are listening to this outside of the state, I'm sure you're having a good year in real estate as well. But what we have down here right now is such a very, very different environment. And I definitely want to talk about, we're going to talk about that after this, is the comparison between those years back then to now, because I want to get your take, I want to get my take as well, as to what we feel is different this time, right? And what could happen and why. So I definitely want to make sure that our listeners get the opportunity to kind of get that guidance, because I know I was in the industry back then. I know where you were. I'm not sure if you guys were. I started in 2000. It was a very, very different world back then. So we're definitely going to talk about that. But Steve, what would be one key point, that you would offer advice to somebody listening right now?
Well, I would say this is like two and trifold events happening here. Buyers are in the hopes that within the next course of the year, that if mortgage rates are going to continue to increase, that their mindset is maybe the seller is going to come down in terms of their asking price. So there's one part of that aspect. But then again, Shane, you mentioned that there's these companies buying up tons of properties every day, paying cash, no inspection, no nothing, no contingencies. So that's also the big part of the competition there too. I think that, if somebody is considering purchasing, just talk to a lender, see what can be done. Maybe you can sell your house for more. If everybody, a lot of people in Florida are selling their house for more, why can't you sell your house for more? See what you can do, or maybe downgrade a little bit. If you got $1 million and you've got a couple of properties, sell one of those properties. Consider maybe, always something that's lucrative into the Airbnb foundation of doing those types of things. Get your Airbnb license and make money that way. Maybe someone else really needs that home. I don't know. Maybe do a good deed. Good karma will come back to you. Just a thought too.
One thing I want to touch on that you said too is, people are hoping that prices come down, as rates climb. Rates are going to continue to increase, even if they stay where they're at the end of the day. If the property values are coming down but rates are going up, it's still your buying power is still going to be just as much affected because rates are still climbing.
Exactly.
So it doesn't make any difference if they stop going down. I'm sorry, I lost my train of thought.
One of the things that, sorry, Kyla.
Go ahead.
One of the things that, to touch on what you guys said before, that buyers don't consider when they have the mindset of prices are going to come down, is that if that does happen, lenders get more cautious too.
Very true.
So if you
Absolutely.
are one of those people that
Because that's their
need a
collateral.
mortgage and you barely qualify because the prices have run up so far, if prices come down, underwriters will get more cautious.
Right.
And you are going to be negatively affected because if you were borderline before, they're going to say, well, this person, the DTI, the debt to income ratio is a little bit on the high side. They are not, they haven't been employed at this particular job very long.
And we see values in
So
this
you're gonna-
neighborhood depreciating, because those are things that they look at when you get your appraisal. The appraiser, those are things that they analyze, and those are things that are included in the report. So if they see that you're buying in a neighborhood that's depreciating, and like you said, your ratios are high, that's a risk to the lender, to the investor. So you got to also look at it from an investor's point of view. So with the way things are right now is the best time for you to buy. The rates are still good. I mean, look at the credit cards that you probably have with 18% interest rates. Or look at the rent that you're paying. That's 100% interest rate. So,
Correct.
I mean.
Yeah, it has gone up very high very fast. But once you take a step back and look at the shock, the shock wears off and you go, I'm getting this $500,000 mortgage at 5% a year fixed for the next 30 years, or at 4.5 or 5.75. That's still historically very, very low.
Right.
Yeah, absolutely. And look, I think that ultimately this really comes down to lack of education, right?
Absolutely.
I deal with people that literally have 10, 12 properties and they still don't know what they're talking about. Okay.
Right.
That is true.
Look, if you're listening and you want information, we'll have everybody's social media links in the description here, along with some emails if you guys want to share that as well.
Absolutely.
Reach out and just ask questions, right? If you don't ASK, you don't GET. Ask the questions and get the answers.
Right.
Don't just make assumptions. And listen, don't listen to your friend or your
Please.
mom or your friend's
Please.
friend. Everybody's got a friend. Call a professional. Everybody in this room here has extensive experience in real estate and or lending. So reach out. Ask some questions. If you're not sure who to reach out to, ask me and I'll let you know. But don't go into this market uneducated. Don't go into it with assumptions. Don't follow rumors. Don't listen to headlines. Speak to a professional. Find out at the very least what you do qualify for, what you can and can't do, because your decision might be affected based on that alone.
Absolutely. That's the other thing too I want to add on. A lot of people tell me, oh, well, I'm not ready yet. And okay, so what do you need to get ready? Well, my credit's not that good right now and I need to save a little more. And so I always say, well, let's see where you need to get your score to. And let's see what we need to do to get you to that score. And okay, you only have $10,000. Let's see how much you're going to need. Because if you don't know how much money you need to save, how are you actually going to attain that goal? It's kind of like when you have goals, you write them down, right? And then you come up with a game plan to achieve each of those goals. So if you don't even have any idea how much money you need to purchase, then how are you going to ever get there? The other thing is there's so many resources when it comes to, helping you with closing costs, whether it be down payment assistance programs through your county, whether it be credits that you can get from the lender. Yeah, you may have to pay in the rate. Nothing's free. But, there are options out there to get you in a home. And even if you do have to pay a little higher interest or to cost you a little more, down the road, at least you're not paying someone else's mortgage.
Of course,
Correct.
of course. And you know what? Here's what's interesting, right? And again, for my listeners out there, I always talk about personal experience. So here's a real life scenario that just happened back in January. I was helping one of my models. She was looking to buy a home and she was very skeptical. And I'm like, listen, you're 23 years old. You have everything going for you. You're in college. Like, why are you still doing this whole rental thing, right? When you can buy. She's like, oh, I bought a new car and my credit, dropped drastically. So I don't know what I get. I'm like, well, what is it? So she has like one of these apps that you get. She had a 742 or something like that. Right?
Great.
Her credit dropped drastically to a 742. Then when she went to Equifax.com and actually pulled her tri-credit report, she had like an 815, a 790, and a 745, right? So
Great.
she just
Does
didn't
she want
know.
to buy more houses?
She got the house that she wanted, right? And on top of it, her family was putting down $50,000 in cash on a $170,000 condo, right?
Wow.
So I can go on and on and on, but ultimately I spent the time to educate. Of course, her parents were old school, so they still did the down payment, which I think was ridiculous. But ultimately, this was a person who wasn't going to buy because she thought that her credit had been damaged so bad by buying a car that she only had a 740 plus credit score.
A lot of people think certain things. Like we have the people who think their credit's better than what it really is.
Of course, yeah.
And then we have the people who think their credit is worse than what it really is. And then some people don't realize, you really can qualify with as low as a 580 credit score. Pricing wise, we always want you to be at least a 620. But I mean, people think you need like a 700 score, and you don't. It's just not the case.
Well, again, we talk about societal standards.
And that's what you and Marcio did. What happened was a situation a couple of weeks ago. I had a buyer who didn't meet some credit criteria. I connected her to Marcio, and Marcio was able to connect her in terms of getting up her credit.
Right.
So,
Yeah, that's another thing too that you guys have to know about is that there's ways to increase and improve your credit score. Look, just literally going through and removing false information, old addresses, bad phone numbers, alias names. I mean, there's a lot of junk information that goes on the credit reports on a regular basis. Removing that stuff alone helps your credit, right? So there's so many different things. And again, speak to a professional, find out what it is you can and can't do.
When it comes to credit repair, please speak with a mortgage lender, because I know there's a lot of credit repair people out there, and some of them are good, some of them are great, some of them are not so great. And there's certain things that they may do that actually will negatively affect you. with multiple disputes. I have someone right now with like 7 disputes on her credit report because she went through a credit repair person, and those disputes were not cleared up. The issue wasn't resolved. It was just disputed. So now when we go to try to do things on our end as a mortgage lender, depending on the type of loan that you're doing, we're not able to close with those disputes. We actually have to have you remove them all and then rescore your credit. So when those things that you disputed go against your credit score, now you may not qualify. So that's the other reason too why I tell people, like, okay, you're saying you're not ready to buy till, I don't know, December, right? Well, let's take a look now to see where you're at, because you might have a lot of work to do that could take you 3 to 6 months. And guess what? Now we're in December, so you want to be able to know what those obstacles are that you need to overcome now so that you can
Absolutely.
get ready.
It could be really worth it getting out of your lease. If you can get out of your lease, instead of paying a double mortgage, why not consider?
Absolutely.
And on that credit topic, I will really make sure you know who you're speaking to, because I'll give you another example. My old business partner, who did not listen to me, I hope you're listening, Chris, went ahead and paid the service to fix his credit.
Yeah.
And this was, let me see, God, we're going back 2014. To this day, he can't get financed for anything because he looks like a phantom, like he doesn't exist. So whatever they did to his credit, they removed absolutely his entire history. Like whatever they did, his social security number is valid. But when you pull a credit report, it's obvious that he had something done to it. It just looks like he's a phantom, like it doesn't exist.
Right.
Yeah.
Right.
You can get your credit report for free. Can I list the website?
Yeah, go ahead,
it's
of course.
annualcreditreport.com. Anybody can get it once a year for free.
I also have
better than
another
Credit
link.
Karma?
I also have
It's not Credit Karma.
It's better than Credit Karma.
It's better than
Yes,
Credit
Credit
Karma.
Karma.
It's
Yeah.
going to give you the 3 bureaus FICO score. So get that before you spend $1. Talk
Yes.
to a lender.
Yes.
And if any lender you talk to doesn't offer you at least
Right.
a 15-minute consultation for free, if they ask you for you to spend $1 before
Right.
you spend 15 to 30 minutes with them, do not use that lender.
No, of course. I mean, look, guys, again, and look, we're going to talk about this obviously for some time here, and it's always going to come back to the same thing, is reach out to a professional and ask questions. Understand what questions that need to be asked and what type of answers you should receive. We actually spoke today, and I think all of you are going to put together a little educational course. So as soon as that is available, I'll get it out to all of you guys. And this is just going to kind of go over brief stuff that we're talking about today, a little more detail, and more so, what questions should I ask and what answers should I receive? Now, of course, I'm going to suggest you guys reach out to one of these wonderful professionals here, but at least you're going to have the knowledge you need. If you do have a friend of a friend or whatever else that you refer to, you'll know what questions to ask. And if you're not getting the proper answers, it's time to look elsewhere.
Absolutely.
Absolutely.
Yeah.
Absolutely.
So let's talk a little bit about the market and where we all think it's going, right? Because I think everybody has a different understanding and perspective. My personal background, again, I started in 2001 in title insurance, ended up getting involved in lending, as most of you know, and very, very big in lending, real estate, you name it. Got out in 2008, right before everything blew up, and went to the loan modification space for all the loans that I helped put people into that should have been in there, right? But it was a very different world. And I'm just going to touch on this real briefly on the difference between that then and now, and why so many people are afraid of what happened then is going to happen now. There used to be something called a stated loan. Now, I could go over 100 different products, but here's why the stated loan was so detrimental to the industry. You didn't have to prove anything. You just had to say, I work here, I make this much money, I have this much in assets. You didn't have to show bank statements, pay stubs, nothing. You just had to say, hey, this is what I have. And I know this is going to sound crazy to a lot of you out there, but some people weren't honest. Right? They might have overstated their salary, their assets. So banks were lending out money. And I always go back to this one situation. I got somebody 125% financing on a $685,000 property. He had a 475 credit score. All right. I want you to think about how ridiculous, for those of you in the industry, how ridiculous that sounds. And ironically, that was right middle towards the end of 2008. And one of the main reasons why I decided to remove myself from the industry, because I just knew something was not right. And I didn't come from a financial background. I didn't go to school for nothing like that. I knew something was coming. So these days, you don't have those type of loans. And more so, there's so much money pouring into the industry right now from foreign investors, from major institutional banks. I've got hedge funds right now that are begging me, hey, take $50 million a month and try to spend it. And you just can't do it, right? On the type of property that I do. So there's so much money out there right now pouring into the industry that it's impossible for what happened last time. I don't want to say impossible. Very, very difficult for the same thing to happen. Something, in my opinion, is going to happen. Things will regulate, right? But remember this, buy and wait. Don't wait to buy. Because ultimately, all the lows over the years are higher than previous lows, and the highs are higher than the previous highs. So over the course of time, real estate is going to appreciate. Whether it's 1 year, 10 years, whatever it is going to appreciate, period.
Absolutely. I actually just had somebody send me a message yesterday. Him and his wife have been thinking about buying for quite some time. And, they've just been watching the market. Same thing, like, a year ago, they were like, oh, we're going to wait to see if values go down. Here we are, the middle of 2022. And they're like, okay, we've been waiting for a year and a half and nothing's changed. So he actually messaged me yesterday. And, I always say, like, all questions are good questions and you're not expected to know things, but he actually thought, he was like, hey, if values do go down, what happens, like, with my mortgage that I signed, like, does the bank try to like renegotiate the terms with me? And I said, no, absolutely not. Whatever your terms are that you sign upon closing is what you stay with. I said, we would put you in a fixed rate. Some people are getting adjustable rates in this market because they do want the lower interest, and they have plans to leave that property, in 5 years. So they might do a 5-year ARM, which means your rate is fixed for 5 years, and then upon that 5th year or 6th year, you need to refinance, or your rate is going to adjust, and it will adjust based on the market. So you have to know what you're doing when you go into ARMs. And back when you were in mortgage, we gave out a lot of ARMs, a lot of interest-only loans, and a lot of people didn't understand how interest-only loans work. They were just like, oh, cool, great rate, and then we had the 3, the 5, and the 7-year ARMs that were really common. And a lot of
10-year balloons.
Yes. And a lot of
negative amortization too.
Yes, those too. Oh my God.
Kyla, the big difference now is that in order to qualify, the lenders are using the actual interest rate and not that teaser rate from 2008. So in 2008, you would get an ARM loan that would start out with a 1.5 interest rate. And if you could pay the 1.5%, you would qualify and they would give you the loan. No longer the case. So now they are using the actual rate to qualify.
So if
even though
I
you might get a teaser rate that is slightly lower.
People on what caused all the foreclosures from 2008 and what went on in the years prior to 2008 that led up to that. So with these loans, like what Shane had mentioned, these stated income loans, we had what we called NINAs and CISAs, no income, no assets, stated income, stated assets. So people were literally just saying that they made money that they didn't actually make. They
were liar loans.
If you tell me you make 10 grand a month and we qualify you based on 10 grand a month, but you really don't make that, obviously you can't afford it. So what happened is, these people, the biggest thing was these people with these adjustable rate loans, when it came time for their rate, they didn't even know to refinance. So then their rate shot up and then they're like, oh my God, my payment just like tripled and I can't pay my mortgage. What do I do? Now, because the market crashed and the real estate property values declined significantly, they had no equity in their home to refinance. There was they couldn't refinance. There was no option to refinance. So they were just stuck with this enormous payment that they couldn't afford, and they had no way to go. The only option really at that point was a short sale. So a lot of people just foreclosed on their homes and lost their homes because the equity wasn't there.
And that was a big part of a pitch in a lot of cases. Me personally, I helped a lot of people do this in the early 2000s, like around 2002, 2003. I stopped around 2006 because I knew it wasn't going to last forever. But ultimately, they even had 1-year ARMs in some situations, right? So keep the property. You're going to gain 15, 20%, right, over the next 12 to 18, 24 months. Easy. So just refinance. And I would coach them to take the money out, go ahead and put your year worth of mortgage payments in escrow and let that pay your mortgage So your home was paying its mortgage for itself, and then in 12 or 24 months, just do that again and keep doing this. The equity kept building in the property. Well, at some point, the equity stops building at 20% a year, and they end up getting stuck. And also, hey, in 5 years, your financial situation should be different, right? You've got a job, you're growing, you started a business, you should be able to make that higher mortgage payment by then, right? Well, they end up sitting in the same situation 3-5 years later, and they're stuck. So, there's so many different programs we could discuss that cause that are just not happening now. Right. So again, something is going to adjust. Rates are going to continue to go up.
Right.
The increase of equity is going to slow down. But there's just far too much money, especially in Florida. We're talking about far too much money coming in and continually coming in.
For there to be an end in sight.
I have people with 5-year plans that have $500 million, literally $500 million plus, with a 5-year plan to continue buying property, right? So where are you going? And that's one. There's hundreds, if not thousands, of these groups or of investors out there that are looking to do this.
Right.
And one of the biggest differences now too is 57% of all sales in Florida are cash. So of the remaining 43% that do get a mortgage, they average 25% down payment.
And when we talk about cash, let me also add that a lot of these cash buyers are really securing hard money loans, and we even actually have one of our wholesale lenders that is now offering a program where you're presented as a cash buyer, and then they go ahead and do like a bridge type of loan to put you into a more permanent long-term loan. So when you see these cash buyers deals fall through, which happens quite often, it's because they weren't able to secure that hard money loan and come as a cash buyer. So with hard money loans, you look like you're coming with cash on a contract. And for the seller, it's great because you have less terms to meet. Usually those terms have already been reviewed and that person's already been approved for what it really is like a line of credit. So yeah, we do have cash buyers that literally have cash in their bank account. But a lot of these cash buyers that are
they're just delayed financing. They're closing cash with someone.
Right.
And 30 to 60 days later, they're putting a mortgage on it.
And this is what these realtors are starting to learn, these seller agents that are like, no, I'm going with the cash buyer. I'm going with the cash. I'm like, okay. So I always tell my my buyer agents, I said, make sure you get a backup offer for when that cash buyer falls through. And it's happened. And in the past month and a half, I've had 2 of those.
And that's the thing, again, so we just go back to the same thing, ask, right? You don't know really what you qualify for. There may be opportunities for you to be a cash buyer, even though you don't have the cash. So just look, there's nothing wrong, nor does it cost you anything to reach out and find out what you actually qualify for. So we talked a lot about lending. Let's talk about real estate, Steve.
Yeah.
Give me an idea. I mean, you're out there now every day hustling. It's a very different world. I know it's extremely competitive. We have open house. I had an open house the other day that had almost 80 people come through in the first 2 hours. Wow. It was insane. And the offers just come in just like waterfalls. It's ridiculous. So kind of tell me what your experience is right now. I mean, what can a buyer really do to, if they want to start getting this ball rolling, what's the first step in your opinion?
I mean, once they have a pre-approval letter and they're emotionally, you have to, not just you're financially ready, you're emotionally ready, you're ready to go because I'm driving from Miami Beach. I'm going to show you something. If you want to see something in Jupiter, you got to have that emotional sense first. And what I would say is, in order to beat out these types of offers, unfortunately, in many situations that you do an offer with something more incentivized for the seller, even though you're thinking like what's best for me, and I'm going to do everything that's best for you, of course, to my buyer or to my seller. But if I'm working with the buyers, what's the seller thinking here? Let's see. Maybe we do a smaller inspection period. Maybe we put up a little more into escrow. We increase the offer if we know there's several offers on the table already,
or waive the appraisal,
do an earlier closing date if possible. If the seller needs a post occupancy, okay, let's go with it. They need that extra month or 2, just do it, because if you really want that house, we're going to have to put in the best offer possible. So I would say that maybe a couple of those different things would definitely would definitely, be more incentivized for the seller standpoint.
One of the things that I recommend, whichever lender you're using, is to have your lender call the
Contact
realtor
the seller agent.
and then contact the listing agent and say, I understand Steven just put in an offer for Mr. XYZ buyer. Let me tell you about Mr. XYZ. Obviously, Kyla and I we don't disclose personal information, but we'll give you all of the parameters without disclosing confidential information that make Mr. X, Y, and Z buyer a good buyer, and why that listing agent
Also makes him a
take their
person.
offer. Exactly.
Right.
Also makes that person.
And we like to also tell them what we bring to the table as a lender, because you can have a great buyer, but if you don't have a great lender, everything can go left really fast.
Of course,
so,
absolutely.
So we want to, give them our background, let them know what our turn times are, let them know, just how we conduct business. We want to let them know that, we will remain transparent throughout the transaction. We will be in touch with you throughout the transaction, because those things are super key to getting to the closing table and everyone being happy.
That you work with a great title company too.
Yes,
Title.
and having an excellent title company, trust me, is crucial.
It's so critical.
Crucial.
Oh no, you and Marcio are amazing. Like all my buyers love you.
Thank you.
Yeah.
Steve, one thing that sorry, I didn't mean to cut you off there, but one thing that you said that I really want to make sure you guys are really understanding is think outside the box. That's what he's saying here is like, think about other things that, okay, I can't add another $20,000, $30,000 to the deal. What else can I do? And maybe even ask the question, ask the seller agent, what else can I do to really help this seller make a decision to give me this property? Right. So it might be, it might be post occupancy. It might be a quicker closing date. There's many different things that you may not even think about talking about until you've asked that question, right? So really try to think outside the box, have a very make it happen mentality, and make sure the people you're working with have the same mentality. That's key, right? Because if you're working with, I know this is going to sound crazy, but there's a few lazy realtors in the state of Florida.
No,
so, right?
Just a few.
Just a few. And lenders too.
And lenders too.
So, if they don't have the same mentality of, hey, we're looking to get this done, we want to make it happen, we'll do whatever it takes to get this deal done. If you're not all on the same page, it's going to fall apart somewhere. Absolutely. So make sure your team, and when I say a team, you have a lending team, you have a real estate team, your team should be working together with you well. Your title insurance company should be making sure that any issues are addressed up front, that your closing date is going to be when and where you want it to be, that your lender is on board with everybody, that your real estate agent is communicating properly, which is probably one of the biggest issues that we see as a title company, is the real estate agent not communicating with the client's properly. So make sure that all these things are coming together. And I know it sounds like a lot on your plate when going through this process, but if you have the proper team in place, your life will be so much easier going through this process. Absolutely. And it all starts by speaking to a professional and asking the right questions.
Absolutely.
And keep the goal in mind, right? Because your goal as a buyer is to get a home and move in, become a homeowner, move into the house. So even during periods of frustration, like I've put in 10 offers and none of them have been accepted.
Right.
But do not lose sight of the goal, which is I'm going to stop renting and I'm going to buy a house. And
right.
it's
And
gonna whether it's this month or next month,
right.
Or a year and a half from now.
Or a year and a half from now.
Like Steven had said too, you need to be mentally prepared and emotionally prepared going into it. And I think if the proper expectations are set, you know you're going into a competitive market, and some people have less to work with than other people, so it can be a journey, it can be difficult, but you also need to remember what's meant for you is going to be for you. That the property that is meant for you is going to end up being yours. I've seen offers get accepted by people that or for people that maybe weren't the most competitive offer, but there was something there that the seller saw or liked that made them be the choice to proceed with. So, you got to analyze your game. You got to, like you said, put yourself in the seller's position. And you got to protect yourself, but you also need to be competitive and make your offer as attractive as possible.
Yep.
Yeah, just understand the other side, right? You're both in this transaction together.
Right.
They're trying to sell, you're trying to buy. So you guys have a common interest, a common goal at hand. So how do we make it happen, right? That's always my big thing is let's make it happen. Figure out there's always a way, push. And sometimes you take the L, you move on to the next property.
Right.
And, I see that happen a lot. I'm sure you guys do as well, where someone finds this dream home, right? And this is just the place that I want so bad. And they're so excited and just so happy. And they're going to put in an offer. I'm going to offer 5% over asking. And you think they've just done everything possible and then they don't get the deal, right? It goes elsewhere. And then they feel so deflated.
Yes.
And it's like they just get drained of the enthusiasm to go out and find another dream home because, oh my God, that was it. How am I going to find another one? And you know what I realized is that there's always another one that they love better than the one they didn't get. And they say to you,
It's like dating.
I'm so happy. Exactly. I'm so happy that deal fell through because I love this house so much better. Right. So keep that in mind. And you're right, exactly. Just like dating, just like everything in life.
I use that as a, when I'm talking to clients, I'm like, well, we kissed another frog, but eventually your Princess Charming is coming.
And you got to remember too, someone right now is living in your dream home, and that may be their dream home, and so they're taking some time to let it go. But at some point, they may put it on the market. So just be faithful and stay consistent and persistent.
And don't worry, there's always something out there. If you didn't get that house, I got another 3 to 5 homes to show you.
Right.
Okay.
Very close.
That might be a little smaller, but this one's got a pool. Okay, or this one may have another extra bedroom, or it might have a smaller bedroom,
Better
but you got a
school
bigger
system.
lot size.
Right.
Great school system, close to houses of worship. So there's all different facets.
Or maybe there is some cosmetic stuff that needs to be done, and then the seller will give you a credit, and then that's less cash you need to bring to closing. And then the deal works. So there's so many different. I always say every transaction is like a fingerprint because not any of them are the same. They can have their similarities, but every single transaction that you do is it's unique in itself.
Yeah, and if you have the extra cash and it's not going to hurt you too bad, I mean, if you're able to waive the appraisal contingency in certain situations, I mean, that's what you got to do sometimes to get that home.
Absolutely.
Because if you're competing with 15, other people there, so that's always going to help.
And there's tricks, you might waive the appraisal contingency and you're like, oh, but what if it comes in X amount, lower than I can pay, I don't have 20 grand to pay over value. Well, that's when we look at things like the inspection report and we ask for credits and we ask for reductions.
I'm going to talk to the other agents.
Yeah,
Seller
or
credit.
worst
Seller's
case,
credit.
you have to walk away and you lost, your $500 on the appraisal, which sucks, but it does happen. But sometimes, there's other ways you can negotiate that price down.
Look, guys, when you think about it, we've been talking now, I don't know for how long, maybe, about 45 minutes, right? 40 minutes, something like that.
And there's so
much
much
look
more.
how much we've already discussed. And if those of you are watching, your mind's probably spinning around right now if you know nothing about real estate. And that's just goes to really show why it's so important to work with somebody that knows what they're doing. And I'm not knocking anybody new to the industry. There are some people that are new that are fantastic, in some cases better than some people who have been in it for 20 years. But, you really need to know the questions to ask. And that's what it comes down to. Whether you're working with somebody that's a year in the industry or 25 years, if you know what questions to ask and what answers you're looking for, you're going to be much better off going into this because there's just so many little nuances and different ideas and opportunities and ways to make things work. I mean, there's just so much to talk about. Your situation, I promise, is different from anybody else's. So speak with them, speak with these guys hearing me today and really find out what works for you. And it might take you, a week or two to really get to that point. Hopefully not, right, guys?
Yeah, hopefully not.
But
It's
might,
okay.
right?
It's okay because Kyla and I have clients who we've been working with for a year.
Yeah,
getting
it's
them
gonna
ready,
happen.
getting them ready. Getting their credit up.
I'm constantly
getting their
planting
taxes
seeds
filed.
everywhere.
Some people are like, I haven't filed taxes the last 3 years. Well, let's start there. Let's hook you up with the CPA.
And that's why I say don't wait to talk to a lender. Get with the lender now and let's find out what your needs are. Let's find out where your finances are, what your income situation is. Some people have some very interesting income situations, especially in South Florida.
That's an understatement. Years
Marcio's got a
ago,
story for you.
years ago, I literally specialized. I don't know if it's specialized the right word, but I had a niche where I worked with women in the entertainment industry and single mothers. Those were like kind of the two that I gravitated to. My mom was a single mom, and just kind of help them understand real estate, understand the financial benefits and whatnot. And I ended up building out this industry model. And obviously back then it was different because of the stated stuff. It was very, very easy.
Right.
But even now, as we work through those different types of industries, there is a lot of different ways to, how do I say this in a proper way? Yeah, to qualify. There you go. There are a lot of different ways to qualify. And if you're working with the right professional, they're going to make sure that your money shows where it needs to show and is applied where it needs to be applied.
Right. Like we
is that the cleanest way to say that?
Yeah.
I mean, it's totally legal.
This is the thing. We understand that people who are self-employed people who don't make their money on the books, you know, they often don't claim everything that they make because they don't want to pay Uncle Sam. We get it. You need a good CPA, okay? Because there's ways to get yourself tax breaks while still structuring your tax returns in a way that us as a lender are able to add back, you know, that depreciation
Absolutely.
or that business mileage or, you know, there's a number of things. So a good CPA is definitely crucial. And then not only that, yes, having somebody like myself, Marcio, who we are very seasoned in the business and we can direct you on the steps that you need to take in order to qualify, what you should be filing, that you need to make sure, you know, you're claiming what you make. We don't want you to claim more than you really make because we want you to be able to afford what you're getting, but you want to make sure you're not writing off all your money where you're ruining your chances. We do also have other programs. We have bank statement programs, very popular with our self-employed borrowers who their tax returns, you know, they don't qualify. Bank statement programs are great. We also have investor programs where they don't have to show any income at all. It's based on the property cash flowing as long as that property pays for itself and rental. There's so many things we could go on for days. That's why it's so important to talk to somebody who is a professional and seasoned in the business to give you your options.
I've gotten 3 calls this week with folks who say, I don't report a lot on my taxes.
It's all the time.
Is there something we can do? And I said, sure, we can, you know, potentially look at the bank statement program if you have your money at the bank, right? In the bank.
And we now have that P&L program that we're looking to. I'm learning more about that. Different lenders. I've been getting emails from my wholesale lenders. You know, they have this profit and loss program where you literally can just get a P&L from your CPA for last year and your year to date, and they'll qualify you based on that. So now,
that's pretty interesting.
But the difference from 2008, right? Because a lot of these things are like, oh my God, that's going to lead us back there. No,
you got to
because you got to put a lot more money down.
Yeah, of course.
But the interesting thing about these 3 calls that I got this week is that I said, okay, let's look at your bank statements. No, I don't really put a lot. I'm like, where do you put this? Where is this $50,000? It's literally under the mattress, Shane.
Yeah,
I had somebody who,
the comedian, he says something about that in a skit. He's like, it's just cash.
Well, interesting. My mom is never made more than $50,000 in her life, and she's a homeowner, right? And single mother like yours, Shane. Mm-hmm. And I'm very proud of her. Mom, hello.
Hey, Mom.
Once she was sick for a little bit. But she always had the habit of putting $20 in a little envelope and putting it under the mattress. And when she was sick a few years ago, she forgot about it. So one day she says to me, your dad moved the bed around, and when he lifted the mattress, I saw all these envelopes. And I said, yeah, what happened? She's like, I counted them. There was $7,000 under the mattress.
Stop.
I can tell you a lot of under the mattress stories, believe me.
But these calls for this week is like $50,000 and $60,000 and $70,000 under the mattress.
Like these
and I
people
said,
that
at least if you're listening to this and you have mattress money, right? If you have money under your mattress, go to a bank and get a box, please.
Put it in a safety deposit box.
Hashtag mattress money.
Yeah, mattress money, please. Go to the bank and get a box.
Absolutely. Like we have to document your funds too. So that's a whole nother conversation that we could get into. Like Shane said, we will share our Instagram, social media, emails, so you can contact us. You know, we could be here.
And like I said, they're going to have some good courses that are going to come out. One specific towards real estate, one talking about lending and different opportunities. So, good opportunity to kind of learn. So, if you're not ready today, if you are, again, I'll have social media and emails in the description. Go ahead below, click on it, reach out to these guys, and they're going to definitely take you in the right direction.
Absolutely.
And your title work goes to peak title, just saying.
Yes.
Absolutely.
Sure. Peak title, number 1.
That's it. And if you guys remember, last Thursday of every month, quick little plug, the last Thursday of every month, if you're looking to buy or sell a property, come check out our events. We usually have anywhere from 80 to 150 mortgage and real estate professionals looking to reach out and looking to educate. So good opportunity if you want to actually meet some of these people in person and make sure your personalities and that synergy is there. So great events last Thursday every month. Check out my LinkedIn or usually on Instagram as well. And you get some more information about those. But definitely a good time, right? We met at one of our events, right? Did we?
Yes, we
sure did.
Yeah. Actually, she met one of her. We should talk about that real quick because we didn't get that on camera yet. We will tomorrow. But at our last event, there was a young lady named Claire there. I hope she doesn't mind me saying her name. But a young lady named Claire, and very nice, very, very smart. I'll let you tell a little more about it. But today at breakfast when we were talking, she's like, I met my new assistant at your last networking event. So these networking events are brought together to bring industry professionals, people who want to get in the industry, buyers, sellers that are looking to meet a professional. You know, everybody's got a guy, right? Oh, I got a friend that does this. Well, come meet your friend. You know, you should have a person that you refer people to, right? So come meet them at our networking events. But Kyla, tell us about your Claire story.
So Shane had, you know, this event, like he said, last Thursday of every month. So this girl, Claire, a woman, she's very ambitious. So she wanted to become wants to become a loan officer. And she sought out where she could go to a networking event and meet people in the business. You know, smart, obviously, she wants to get in the business. I need to be around people in the business. So anyhow, she had come to Shane's event and she actually spoke with Marcio first, my partner, and Marcio was in conversation with a realtor. So, you know, he kind of passed her off to me, like, you know, she's have a conversation with her. She's interested in getting in the business. And as I spoke with her, I realized how intelligent she is, NYU grad at that. And
We are.
You're an NYU grad as
Yes,
well.
I am.
Yes. So
Something in common, right?
he needed to brag.
Thanks, Mom. On a scholarship.
There's that mattress money right there.
On a scholarship. No mattress money here.
mattress money?
No, I couldn't afford the $28,000 it cost back then, 20 years ago. Now it's
28,000,
yes.
that's it.
Now
It
it's
was
like
a lot more than
75.
that.
Broward
I'm
College
dating
boy, right?
myself. 28 back then.
Yeah. So anyhow, I met Claire. We spoke for quite a bit, exchanged information. I ended up hiring her. She is now my assistant. She actually just took her MLO test last week, and she passed first time, and she got a great score.
Good job, Claire. Congratulations.
Yes,
Yes,
congratulations, Claire. So she just started with us yesterday. So we're super happy to bring her on board, not only as an assistant to us, but she's also going to be a producing LO.
That's right.
That's pretty awesome. Like I said, obviously I didn't know about this until
Thank
this
you,
morning.
Shane.
You're very, very
Thank you,
welcome.
Shane.
But I'd love to hear these stories because that's what these events are about. And I want to really clarify, this is a true networking event, right? So when you go there, I don't have 24 salesmen running around pounding you guys for business. You show up, you register, we let you know who we are, what we do, and we're looking to schedule a meeting next week to talk business. In the meantime, have fun, enjoy open bar on us, some good food on us, and meet some great people in the industry. And you just enjoy yourself for 3 hours, right? And that's really what separates our events from everyone else. So again, if you're in the industry, or you're looking for a professional to work with, the last Thursday of every month, the next one is tomorrow. We're filming this, but then June, whatever the last, I think it's June 30th, 31st will be the next one in Fort Lauderdale. So if you're interested, shoot me a message or go to one of the links and sign up. We'd love to have you there. But it really is a good time if you just want to come out and get to know more about the industry, or even if you're thinking about buying and selling and you want to speak to a couple different professionals. You know, not everyone's personality works with each other. That's just reality. So come out, meet a realtor, meet a mortgage professional, understand their drive, their work ethic, their passions, what their mission statement is, and make sure it aligns with yours. And, you know, you never know. You end up building a relationship that would last quite a long time. I mean, my realtor that I do business with, I met in, I think, 2008, something of that nature, 2006, and it's 2022. We still do business, right? So, you know, these relationships do last a long time.
Absolutely.
Odds are you're not going to buy one property your entire life. If you do, congratulations, but just not reality. And if not, guess what? Your friends are going to need a property, your kids are going to need properties, your family members, your loved ones, et cetera, et cetera, et cetera.
Everyone needs a place to live.
It's average of 7 years.
Yeah. So look, you know what? You know, come out, meet some people, and have a good time with it. And again, open bar. No drink tickets, no well liquor. It is a true open bar.
True open bar.
Good
He really
food.
knows how to throw an event.
We really have a really, really good time, and all really top.
Drink responsibly.
Yeah, drink responsibly. I'll get you an Uber too. Don't worry. Just let me know. But we know we picked pretty good establishments, and I think we really had a good time with them, and we're going to continue to do so. So in wrap, I think where are we at here? About 5 minutes. So we're going to wrap it up. And again, I'll just go around again. Let's just say your name one more time and where they can find you if you want to put your phone number, email, website, whatever you have. And give anyone that's looking to speak to you guys an opportunity to reach out. Kyla?
Again, I'm Kyla, mortgage loan officer. You can follow me on social media at Kyla.ismortgage. I'm sorry, at Kyla.is.mortgage. And you can also reach me by email, Kyla@amethystmortgage.com. Phone number 305-748-0425.
Wow, she dropped the digits, guys.
All right, I'm going to drop those digits too. This is Steve Grossman with Compass, Florida. My number is 305-319-0879. My email is steven.grossman@compass.com. And if you ever have any real estate questions, I just want to know any market updates or want to check out the next property, feel free to give me a shout. I'd love to help.
All right.
I'll give you my number as well, but I'll pick up the phone.
That was a dig at me.
That's the difference.
That was a dig at me.
You can text Kyla, but you can call Marcio.
Just leave a voicemail if I don't have your number. No.
I'm one of those who refuses to give up his New York cell phone number, 917-843-6850, Marcio at amethystmortgage.com. And we have Amethyst Mortgage on Instagram as well.
Absolutely.
And again, we'll put these links and information in the description of this video on all social media platforms as soon as we get them up. I actually did have a question. I completely forgot what I wanted to ask now. I'm a little annoyed.
You had been looking at me, that's why.
You threw me, exactly. The number threw me off a little bit.
I don't know if that's a good thing or a bad thing.
I'll let you know after this podcast when we're off camera.
After the third drink tomorrow.
Exactly.
All right.
Truth will come out, right? Truth will come out. So anyway, guys, listen, I appreciate you guys watching and paying attention. You guys will be able to see this on LinkedIn, Instagram, TikTok clips, some reels, and of course on YouTube. I really appreciate everybody being here. Any last thoughts before we go?
No, just make sure to contact a mortgage professional before purchasing any property, whether it's residential or commercial. And we do both, by the way.
And they do both. All right, guys, appreciate you. Sponsored by Peak Title. I appreciate you guys.
Thank you for having us, Shane.
Thank you, Shane.
Thanks.